All right, we are at 512, video 2 of 2. We'll start with ET, energy transfers. You have a low, you have a high, you're right in the middle. So not a lot of advantages for either side, buyers or sellers. Looks like it has pretty good support, 1575 or lower. That red line on my screen is the heaviest volume area, but it's heaviest volume line, but it's more of an area, and it starts where we are and it ends in that. So 16 to 1570 is a lot of volume. If you buy a call, you're guessing. If you buy a put, you're guessing. If you're an investor, there's nothing from the chart that you're going to gain to tell you buy or sell. I don't know what that is. You're going to have to study the company from a fundamental perspective. It has an earnings report, it looks like, on Monday. There's no need to say anything. Let's talk after they report and react. 5 below. The market is telling you avoid, avoid, avoid. I live in a pretty good little town, and that's one of the only two stores went out of business, major stores, in my area where the store opened and closed. This was open and closed within like months of each other, and the other one was Lowe's. So I would not touch this, because if they can't make it in my town, I doubt they can make it easily anywhere else. So be careful. And losing this on in a time when markets cannot stop rallying and are at all-time highs is pretty concerning. So now you've taken out a lot of the easy drop. Shorting it is also probably not a good idea. It's kind of like the opposite of THTH. It's too low to chase now short, and it's too unpredictable to go long. I don't know how to say it, but the P&L shows nothing that should be doing this. Look at it. It's almost like Chewy. Okay, so the company is doing well. Why is it falling out of control? So if I'm an investor and I want to take a starting position in it because I've done my homework, then just do that. Take half of a position and don't add until you lose 30-40% of your money. Then add the second half, and then you'd be long from a decent position. Rallies into 168 will find sellers. So do your homework before you quote invest in it. Trading wise, it's hard because you're losing support, and the next line of support is too old to matter as accurately as it would be. Franco Nevada. Okay, that's a pretty unbelievable P&L. Like, what is that? Not an obvious point of entry. This is a weekly chart. Anything above 132 should be facing a lot of resistance. Where it can be anywhere. 134, you can see it. Those green bars, that area was support. So it looks like it's going to hit a lot of overhead supply is what they call it on Wall Street. People stuck long, they'll say, thank you, let me get out. And it actually starts here, which is where we are. Not an obvious entry point. Fortinet, I wanted to catch the falling knife. I still may. The problem is this drop. So I think I'm going to have to say to myself here, you know what? Let's assume this drop should have just been to here and ignore that. So then you'll say, I'm pretty close to the bottom because this looks like something ridiculous, whatever the heck they did here. So I'm going to say there is support inside of here. So if I wanted to sell a put spread in here, I'm not opening myself up to a lot of problems. However, the market is at an all-time high level. If the market hiccups, even if it's just 2 to 3%, what will this do? Might open me up for a new opportunity lower. So I wouldn't want to hold calls. I would want to do something that allows me to not be completely one-sided. So a combination of a sold put or a sold put spread and a bought call or a call spread. So the combination depends on what you can do and what you're willing to do on the personal level. It looks like 57 is the line to look at. So I'm going to put an alert right there. You can see it. It should be an uh-oh statement. It might get you to 52. So if I sell a put spread, I want it to survive that just in case it comes. GC. Okay, so this is the futures contract to gold. The person that's requesting all these futures contract, see if you can put them in a format where I don't have to manually find them. It would help. So GC is in a breakout. It happened so quick last week, and it almost hit actually it did hit the technical target of that breakout. So at 23.85 does not make an entry point. Now a dip towards 23.45 from which they broke out might. So if I'm looking to go long, buy the dip when it comes, if it comes towards the red line and that green box. This 23.90, the green M on my screen, 23.90 was the perfect target. Close enough for government work, I say. So they hit target 1 and 2. Target 3 is into a new high. I don't know if that's going to be that easy. What happened to the dollar this week? I did not pay attention. Okay. All right. So buy the dip would make better. Globe Life, GL. Wow. Okay. So it's clawing its way back into... Is this an insurance company? Why is it off of cliff? This is a scary price reaction to such a stable P&L. Please do your homework. I wouldn't touch it. Let's see what it does against 92 and 93. This gap is not attractive to me. So something happened that's major. You need to find out what. Charts is not your worries. Okay, Google. What did I do? My phone wakes up. It heard its name called. Google, please give me a new trigger word for my phone. Thank you very much. 172 trigger will probably get you a new high. This stock is acting like it's reacting too wildly to non-existing headlines. Out of nowhere, I'm going to share with you like this dip after hours out of nowhere on my screen. Whoop, flash, and then it spends the next few hours coming down to it. It feels like they're being manipulated, these big companies, in order to get to the indices and make money off the indices. They used to do that with, yeah, they used to do that. Hey, Ed, you've been around? They used to do that with Apple when Apple was such a big heavyweight that they did not need to extend that to other companies. Well, now they use the top 3 or 4 companies like that, and Alphabet is one of them. So this blue box is May 3rd, insanity. And then within it, we had a few insane ticks, including Friday. Look at the low, down to 166. Look at the high, up to 170. And there's nothing going on. So this is just price action manipulated by Wall Street at its best. The fundamentals in Google are bulletproof for now. Oh, I remember what it was. The headline that ChatGPT will now have a search engine of sorts. Like, what? Competition? That's the old, the Google killer, the Alphabet killer, or the YouTube killer. There's nothing that could kill a company that big overnight. Trust me on that one. Goldman Sachs. I would not be long Goldman Sachs. I wouldn't short it either. I would prefer short JP Morgan, which I am. No, wait, I closed it. I may have reopened it. I was thinking about it. So up here, if you twist my arm, you got to take a position on Goldman. I'll say bearish because it's in all-time high. But look at the P&L. I mean, this is not a quote, a bank. They did try to get to be a bank, and I think they gave up on it. Super good on Wall Street. It's hard to pick a fight with Goldman. They are well connected. So leave it alone. It's in a breakout. If you're a momentum trader, maybe you get the 500, maybe you don't. If you're an investor and now you want to go long Goldman, I would push back with a simple question: why now? Where's the fire? If you're an investor for the long term, you're okay to miss 10% of upside, just like you're okay being down 10%. So why now? Where's the fire? That's what I say. Technically speaking, this is a beast, so I would not pick a fight with it. THTH. H, Hyatt Hotels. The hotel business, now that I do travel and we throw seminars here and there, wow. there's like almost as bad as airlines. And I think there's like 2 companies that own everybody. I lost track. I log into this one company. Hey, this looks like the other website. What's going on here? So buyer at 140. That's what this wick is telling us from the earnings reaction, and it's not a bottom necessarily. Seller at 156. Those are your 2 immediate reactionary lines. Anything above 156 should be resistance. Anything into 140 should be support. And if you lose that, you end up at 130-ish. And it's not that crazy to be there in a couple of weeks. They just reported earnings. So if you're an investor, just study the P&L and see if you think it's going to go back up to wherever you thought it was going to go. So to me, there might be some upside, but it's not for me at this point from an investment perspective. Hood, be careful, okay? If you lose 16, you might be coming down to 13 or 13 and a half. This is an ARK company, ARK Invest. Yeah, we talked about her first thing today. So look at it. If you lose that node, which is 16-ish, it opens a floodgate lower. And this yellow part is an open candle from the rally. This rally was too fast. So there might be technical interest in coming down to below 14 in the next few weeks. You can short it. They just reported. I would, if it pops into 17, or maybe you short it. I'm going to put that. When I say short, please remember, I don't sell stock outright like the traditional short. Not very safe. Okay. Who is this? Hubs. So the reaction to the earnings just gives you the sandbox for quite a few months, I think. It's going to take a lot to get out of the sandbox. So the way I usually do it, check the reaction, say earnings box, and you should know that that is your sandbox for a bit. So what does that mean? When they come down to the lower third of this box, I don't start shorting. I don't give up on my stock if I haven't already. I could start longs. When we come up to the top of the 1/3 of the box, then I do the opposite. I exit my longs if they were trades. I don't start longs, and I can start shorts. So that's the trading comment. Investing wise, P&L looks pretty solid. No reason to give up on it for the long term if you're an investor. This is a look on it. You can see a lot of the selling, these red boxes, those are order blocks, as they say. So basically areas where they sold it before. Now, if by some miracle they take that out, explosion higher. But that looks like a tall order. Now, conversely, you see a lot of buyers inside here. So anything below 530 should be super solid support. In fact, I'm going to put an alert to myself. One here and one there. That would be a really good conviction long down in this area. JD, I don't trade Chinese stocks just because I want as few variables as possible, and Chinese politics is an unknown to me, so I don't touch it. That's from I don't want to be blindsided. So you can see here, support. Whoa, huge rally. Here, support. Less of a huge rally. Here, battle lost. Cannot recover. Now they're trying to recover. So what is that? It means that I don't blindly go long here because it's a pivotal zone into 36. The breakout from 28 was awesome. It might have a goal of 36, but to start longs here, you're putting a lot of faith in the next few days of price action. Earnings in 3 days. Flip your coin. Outcome, we don't know. Johnson & Johnson, I believe we went long when it dipped. You could hold longs from that if you bought calls or shares on my mark. I don't believe I did. I think I sold puts or put spreads. And oh yes, and then I said debit call spreads could work. Oh, there we go. I said sell risk on the way down, and maybe you can buy some calls or call spreads. If you did, you already got paid a lot. So I would exit, but it might still go to 156. So if you want to restart longs to continue the trade that worked, feel free. You should know there are sellers at 152, but 153 and above, catalyst to 156. JP, shortable. That's my opinion. Shortable with a stop. Tactically shorted. How? Sell a call spread, buy a put spread, or both. Sell a call naked if you have calls, if you have shares, or if you know how to short stocks with naked sold calls. Very dangerous though. And buy a put naked would be pretty dangerous. A debit put spread would be much better. A wide debit put spread with an opportunity to a little bit more than double your money. That would be it. So if you want specifics, hop into the live room. We can get it done. LULU is a better long than a short. I believe we went long through a credit put spread. Ulta, LULU, maybe both. Very difficult to trade this thing through the options. The quotes are hard to get. The fills are hard to get, so be careful. But the company is fantastic, and any negative press it gets is an opportunity to invest in it long term. The people that buy their stuff love them. It's kind of like a mini Apple that way. High margin, high price. I don't know about high margin, high price. They believe it works, and everything else is crap. That's what they believe. 368 or higher would probably get another $20 to $25 right away, and then you've got a problem. 392 or higher should be difficult. Just like you have an unbelievable buyer at 336, and God help you if it loses 332. Okay, so I gave you lines. You must hold 332. You have support at 336 also before it to defend it. You might be able to get to 388. Anything above that is going to be super difficult. Fundamentally, there's nothing wrong with the company. I don't know what that is. It looks like technically, if you get to 87, you're probably going to get to 92 or higher. They're buying dips and trying to attack a resistance level. Whatever this tick is, pay attention to it. 96.1. I don't know what that is. So 96.1, 96.2 is super important. LYFT. So we had a lot of discussions on LYFT. This is not Uber, nor is it an Uber competitor. Uber's mission is to become an aggregator of businesses. That's not what LYFT does. At least that was not what they did last time I checked it out. So do your homework on the actual mission statement of the company. If you lose 1550, you're going to go to 13, and you have a bunch of sellers above 18. That's not my opinion. Look at those candles after the earnings. They flashed to 19, died, made lower low, and lower low. Meanwhile, it is making higher lows as well. Lower high, and now higher low. So now what I see, tightening range, imminent move coming, direction unknown. And I'll tell you the outcome of losing this one will get you down to here. It is support in the meantime. And this is a big seller, 19. Another medium seller, 1850. And you have resistance here. So on the upside, you need to be able to get above 19 in order to avoid this. Until then, I think I think in my head, it's easier to get to 1350 than 1950. And they reported? Yes. All right. Mara. Caution. I bring out the caution about trading these stocks. Mara, MSTR. I don't care how good the company is. You have a huge variable that the company cannot help, which is the price of the commodity they deal with. Marathon Digital Holdings. Isn't that a crypto company? Mining, yes. Okay, so like Chevron and Exxon, their top line, their sales line depends completely, almost completely, on the price of a commodity they cannot control or an asset. So what you end up having, the stock moves in violent ways based on through no fault of their own. So when I invest in Apple, I have to worry about Apple fundamentals and the market that it trades in. When I invest in Mara, I have to have the same Mara fundamentals and the market it trades in and the price of crypto. So for that reason, I wouldn't touch it. I have to tell you, I'm watching crypto from last week and this week, and I'm sharing with you. It has a decision to make, crypto, this week and next week. I respect a lot of technicians, a couple of technicians that say much higher prices are coming. I agree, but way in the future, I think we have a dip coming. So I'm watching Ether, and Ethereum might be flashing signals there. So If Mara loses 1450, it goes probably single digits. Okay, and if it takes out 21, it gets to 26. So these lines are still there, the same lines. You see how they popped above the R line and died right in front of, in the middle of my R, and went back to the same area when I drew the R and put this. So move everything right. All my comments you can just copy and move right, and they would still be correct. This pop and drop is still ongoing. MELI, not an obvious point of entry, and I'll leave it at that. Good company, good P&L. This, if you waited, if you're now looking to go long, I'm going to push back on you. It's like, where were you down here? Why weren't you looking to go long down here? Because you were scared. You should be scared chasing it up here into a prior fail. I am more scared up here than I would be scared down below. In other words, you might find better entries for your MELI stock. Same here, Meta. I say don't short Meta. You can short Meta. Don't short Meta. In principle, you can short stock of Meta right now. Why? You have an area that was an amazing entry point. I mean support right there. Right there. But before it was support, it was a huge pop and resistance. You can see that. Oh yeah, support and support. And then a huge accident scene. So now they're going into that accident scene, the blue line zone. So from here to 495, there should be a lot of sellers, and at 510. I think it's easier to come down to here, which is 450 or 445, than it is to cut through 520. However, this is Meta, and it could do Meta things, so respect it. Okay. MGM, they reported, and you can draw a box around the report candles, which is as low as 38 and change and as high as 43 and change, and do what I said to do with the other one. Get long in the lower 1/3, get out into the upper 1/3, or try to short. And this sellers from up here, certainly there would be sellers here, and this buyers, there are buyers here. So it's not my opinion, it's what just happened on a huge earnings report move. So this is the representation of the box. I'm only highlighting the areas where I would act. Okay. Money Lion? Oh, is that the guy with the cheesy commercials? Like Western Union or whatever? I think so. Yeah, whoa. I mean, charts like this are scary to me. In theory, it just broke out and it could get to 120. So I wouldn't fight with it if you're looking to short it. Technically, you can short a stock that looks like this against the prior fail and stop out if it doesn't work. So up here, it's not an obvious entry point. Buy the dip into 72 if you're looking to get long. If you're an investor for the long term, nibble, leave room to double, and then some. Mosaic. So look at how this thing is going. Wow. Oh my gosh. Put this on your watch list. Some pretty fantastic things are going to be happening here. The annual revenues are not that great, and the trend is low. So here's a stock that is getting pointy. What do I mean? A descending wedge like you rarely see in a giant company. And you can say, okay, they're losing levels, but you can also say that they're coming in. So usually wedges have to resolve themselves, and it's a lot easier to pop than drop. But if it drops, it's going to be like 16 or 14 or 45. So take your pick. The upside candle is 42 by, I don't know, October or something like that. But something is going to have to give on a higher time frame. Meanwhile, check this out. So this was my blue line. Wow. I mean, holy moly. I need to dig up the video where I said these. I said it might pop, it's going to hit resistance, and it might drop. So it did pop, and it hit my letter R. Look at that. The letter R. Not that that's how I do trade, but And then look at where it's bouncing. So far so good. So now rinse and repeat those comments against a new letter R that is set inside here. Okay, so this is entirely possible. That's what they're doing. They rally, they hit resistance, and they're making lower low. So now we check for when they stop making lower lows. Maybe this is it. Maybe this was the last lower low they made, and then they come up. So if they go above 32.50 and 33.50 before they lose this low, then that behavior has changed, and maybe this is a bottom and it's a huge up. It is worth a long from a chart perspective and an investment perspective. We're going to need better ways to feed our humans. So I don't know why they're selling it like it's going out of style. So it's worth a long. I wouldn't add if I'm long. If I'm looking to invest in it, I would take shares and I would take a partial position, or sell puts to get shares and buy calls with those. This way I'm out of pocket very little and I could get assigned the lower price. So my risk shifts to, like, instead of putting 20 grand into a stock, I can put a couple grand on the line or less. And the worst case scenario is I actually don't, but the worst case scenario is I buy the stock lower. Morgan Stanley, just like Goldman, comments only less good of a stock behavior. So this stock is going into a prior fail from February of last year, not an instinctive place to get long. Now, I tell you this, that if it breaks out of 101, it's probably going to get to 120 from a technical perspective. Until then, they are selling rallies. So I'm going to do this. I'm going to say from this rally to this dip, copy it over and put it on this rally. You can see the similarities. Wait. Look at how similar these two stints are. All I did is copy this period of time and move it over to here. Okay, let's see if it also works backwards. That's pretty close. So just respect that. Prior history says if you went long here against this cluster of sellers, you might be disappointed. This is a cluster of sellers here, and they showed up here, and they're probably going to show up here. Now, if you break out, you'll be up there. If you don't, maybe you dip one more time, come back and bust out. That would be even better. So I would buy the dip if it comes, if I was looking to get long. Or if I'm looking to short it, I would short with a tight stop. Microsoft, I've heard of them. Okay, remember this rising wedge concept? Look at this rising wedge in blue. I did it this weekend, I think, this week. So maybe Microsoft will be in the 300s in 2 years. This is a high level rising wedge that continues for another 6 months and breaking down sharply. So what I'm saying is they're buying higher highs and higher lows. It's hard to short the largest company on the planet, especially when it has awesome fundamentals. Okay, but that company, even that company will break down if the market also breaks down. So I'm saying that this is in worse shape than the market relative to its all-time highs. So I just don't see it as easy as a breakout as the like 4% or 5%, whereas the market is within 1%, I think, of breaking out. I will take cues from this one to tell me do not go long the markets blindly. This may be telling us what to do. Look at everything above 416 should be selling. Look at the earnings box. So 424 should be an absolute exit scenario. And this scenario of the green things is still in play. Now they did 1, 2, and 3 of them. So we weren't crazy with forecasting lower lows there. They just took a detour. These levels are still valid. Okay, so January 2024, we left the gap in the candles down here. Gaps are not reasons to buy puts unless we're falling towards them. We were falling, and then we bounced off. Unless we clear that, there's still reasons to come down. MSTR, same conversation as Mara. This is probably the best company in there, and it's one that's going to lose you the most money. We do have people that are long stuck up there, and I helped work with a few of them to try to generate income from their longs. And the downside scenario can be minimal, as little as 1040, because that's where they bounce pretty hard. But imagine if crypto drops 20%, and it does that all the time. Where would this stock be? I'm asking. 800? 600? Where would it be? And there is a path to below 800, and it's very easy to see. I mean, this is not Microsoft. It does not have an income. It does have a small income, but nowhere near sustaining the price a bit. Also, there's an argument, if you're a fundamental investor in it, there's an argument to invest in Bitcoin directly. You will get a 50% discount. Mathematically, I believe, I don't know the exact numbers, but I believe it's pretty close to being valued double. So the Bitcoin that's on its books holds a double value than the Bitcoin that actually the spot price of Bitcoin. So that's why I would rather trade Bitcoin. Huge seller at 1400. Huge seller at 1400. And a lot of buyers into 1000. You take out 1400 out, you're going to get to 1680. You lose 1000. I bet you probably will get easily between these two arrows, so 720. I don't want you to short this company. Madness. But look at the premiums in the options. We're talking like $90,000 for one put or one call. Whoa, you can make fortunes with these if you're a good seller. Match.com. P&L doesn't show huge cracks, but the stock price is acting pretty badly, so be careful with that. Technically, 32.50 should be a wall, and if you take that out, you might get to 35 or 34.50. Anything above that is going to be get out, get out, get out. They're trying to hold support, so if you lose 28, you're probably at 24. They're selling rallies. I don't know why, but they are. ServiceNow, I think we went long, or at least we talked about it. Everybody, on any serious dip, this stock has delivered profits when we sold puts or put spreads. Now, I say that, and I caution you against 680. If you get to 680, it's actually a little bit above. If you lose that, you're going to suffer risk as big as this or as big as that. Okay, so just like the other one, these are real threats. Now, I don't think it does this one on its own. I don't think it does either on its own. In other words, the market has to be correcting for this one to do that. But it is in the hands of the bears. You see, this, if this finishes, you get a head and shoulders. Whew, now you can see what I'm talking about. Sellers at 760 or higher, and it's also an opportunity to break out. The earnings reactions box, we need to build that, and let's build it right now. Look at this. I just extend this one to the right and lift it a little higher, exaggerate it, and change the color for convention. You have the playground with a little bit of extra. Why is it that it's trading, that it has traded below the earnings reaction? In other words, why did it fall below the earnings reaction? They're trying to recover the earnings reaction, and if they can't, I think they're at risk. I don't think it'll fall apart all by itself. Okay, this not an obvious entry point. This red W in front of me, it has a target of 1140 and 1110. Unless they take out 1250, you're in danger of those two. So buy the dip into this area. So this is called point B. This is an important area. And look at that. I'm not making it up. This is not a coincidence. Okay. So pay attention to that. Now taking out 1220 will get you 1310. Study the company. P&L looks okay. Oh, earnings in 2 days. Forget that. Anything I said doesn't matter. In 2 days, it's going to have a wild candle. Up or down, we don't know. You don't know. No one knows. The CEO of that company doesn't know. Okay, Open Door. That's a real estate company. We might have a real estate problem coming on our facing us. Luckily, they just reported earnings. Build a box around the earnings and say, okay, this is my playground. And I can't see the actual candles, but those would be the highs and the lows and the triggers. So it looks like this. You're going to trade inside this box. If you lose the lower end, which doesn't look that easy, you might end up lower. And if you take out the upper end, you get some breathing room to with the retend. Are they going to get a notice of the listing if they drop? So you have to keep that headline in check as well. Ooh, that's pretty ugly. Be careful. If I'm long, I'm not adding. Absolutely not. That brings us to the last video of the day. Let's stop the recording.